true.
People are already making jokes that Bullard and Kashkari are gunning for Fed chair. Is that where we are?
Well, I don't think that's going to happen, but I think that we are gunning for 50 basis points on July 31st, and I think that's going to happen. I don't think the Fed's going to stop there. And you got to remember, back in the last cycle, the first rate cut in September 2007 was 50 basis points. You go back to the cycle before then, when the Fed first started cutting rates in January of 2001, first rate cut, 50 basis points. And both those time periods, nobody saw a recession coming, although it came 2 months later in both situations.
Yeah, but in those situations also, 50 basis points didn't take us almost 30% of the way down to the bottom.
That's a good point, but that was the famous, quote from the Q&A about the, the ounce of prevention for the pound of cure. I mean, that was it right there. Brilliantly planned a question, and he told us right then and there that, at these low levels of rates, if you're going to go big.
Although Clarida's point this morning is we actually have some cushion from the zero bound. So which is it, Carson?
Well, definitely that's more of David's domain than mine. But I guess my question is really, how much are the governors, especially the chairman, thinking about the institutional independence of the Fed? I mean, LBJ used to behind the scenes bully Fed chairman when he wanted rate cuts. That's not new, but what's new is this public bullying of the Fed. How do you maintain the independence of the Fed and cut rates in this situation?
Going into an election year, by the way.
Yeah.
Well, I don't think there was any particular pressure that was on Mario Draghi. And these central bankers, they talk to each other practically every single day. So, this is coordinated. The European data have been very weak. What was one of the central focal points in the press conference from Powell was about the weakening trend overseas, and I think primarily he's talking about Europe. And they're becoming appropriately concerned about capital spending, which has been extraordinarily weak in the past couple of quarters, and leading indicators are pointing to further softness. So I think you're right about the Trump tweets and all the pressure is really, unfortunately, it's negative noise. But I don't think that the Fed would be acting any differently if we weren't seeing this pressure out of the White House.
I mean, 50 bips would be a lot, though.
Well, like I said before, they went 50 each of the last two cycles. That was their first move. And I know that people are going to say, well, they didn't change their macro forecast. It's still roughly 2%. But, the Fed, as a group, are risk managers, just like portfolio managers are. And so their comfort zone or their confidence around their forecasts has deteriorated markedly, because the one thing that happened in that press conference that never has happened before was a Fed chairman uttering the word uncertainty 7 times. So they have a lack of confidence over their economic forecasts, and all the risks are skewed to the downside.